What is happening, Pulse Nation? Get ready because the news cycle is moving at warp speed, and we've got the absolute latest updates that you need to know. From seismic shifts on Wall Street to groundbreaking predictions about our future, the world of tech and business is buzzing, and you're about to get the inside scoop. Don't blink because you might miss it. First up, we're diving deep into the surprising movements shaking up the biggest names in the market. We've got exclusive insights into why a tech titan is leading a significant sell-off, even as the broader market shows mixed signals. Is this a sign of things to come or a temporary blip? You'll want to stay tuned for this one. Then, we're breaking down the latest buzz from the futures market, where major announcements are already making waves before the trading week even begins. Get ready for some unexpected twists that could redefine the landscape. And that's not all. We're going straight to the top, hearing directly from the CEO of a company at the forefront of innovation about his vision for AI's impact on our daily lives. Will we all be working less or more? We've got the answer. Plus, we're looking across the globe to see how one nation's tech darling is warning its own investors about the volatile ride ahead. It's a packed show with insights that could shape your understanding of the market and the future. Stick around, you won't want to miss a second. Make sure you're subscribed and hit that notification bell so you never miss an update. Market shakeup alert. Wall Street is experiencing a significant shift as major tech stocks, led by Nvidia, are seeing a notable sell-off. This downturn is impacting key indices, with the Nasdaq Composite down 1%, the S&P 500 off by 0.6%, and the Dow Jones Industrial Average declining 0.4%. While the broader market sentiment is mixed, with nearly half of the S&P 500 constituents trading in positive territory, specific sectors like technology, industrials, consumer discretionary, and communication services are bearing the brunt of this decline. This movement suggests a potential rotation or a reevaluation of high-growth tech valuations, particularly in the artificial intelligence sector, where Nvidia plays a crucial role. The mixed breadth indicates that while some parts of the market are holding steady or advancing, the heavyweights are pulling down the overall performance, creating an interesting divergence that investors are closely watching. This could signal a broader market adjustment or a temporary correction as traders position themselves for the end of the month and the upcoming trading week. The factors driving this sell-off are complex, potentially involving profit-taking after significant rallies, concerns about future growth projections, or shifts in investor sentiment regarding interest rates and economic outlook. The performance of Nvidia, a bellwether for the AI boom, is particularly scrutinized, as its movements often influence the broader tech landscape. Analysts are dissecting the data to understand the underlying causes and predict the short-term trajectory of these influential stocks and the sectors they represent. The situation highlights the dynamic nature of the market and the constant need for vigilance from investors navigating these fluctuations. Stay tuned as we uncover the reasons behind this tech titan's retreat and what it means for the market. Next, we're diving into surprising futures market movements and a landmark legal ruling that could ripple through global trade. Futures flurry and legal landmark. As the trading week concludes and ahead of the Labor Day holiday weekend, Dow Jones futures, along with S&P 500 and Nasdaq futures, are set to open, signaling potential market movements. This anticipation comes on the heels of a significant legal decision late Friday. A U.S. appeals court ruled that most Trump-era tariffs are illegal. This ruling could have far-reaching implications for international trade policy and the economic landscape, potentially impacting various sectors that rely on global supply chains and import-export activities. The market had shown robust strength through Thursday, with the S&P 500 reaching new all-time highs, fueled by a general optimism and strong economic indicators. However, a notable retreat occurred on Friday, with AI-related stocks, including Nvidia, experiencing a pullback. This Friday decline in AI plays, coupled with the news regarding the tariffs, creates a complex backdrop for the upcoming trading week. Investors are now assessing how these two major developments, the legal challenge to tariffs and the rotation away from some high-flying tech stocks, will interact and influence market sentiment. The ruling on tariffs could lead to adjustments in trade costs and business strategies for many companies, while the shift in AI stock performance raises questions about the sustainability of the current AI boom and potential sector rotation. The market's reaction to these events will be closely monitored as traders digest the implications for economic growth, corporate earnings, and investment strategies moving forward. The intersection of geopolitical policy, legal precedent, and technological innovation presents a dynamic and challenging environment for investors navigating the financial markets. But that's not the only major news impacting tech giants. We're also hearing directly from the top about the future of AI and work. Prepare yourself as we explore Nvidia's CEO's bold predictions on how AI will reshape our jobs and our lives. AI's future, more work, not less. In a fascinating departure from the popular notion that artificial intelligence and automation will lead to widespread leisure and universal basic income, Nvidia CEO Jensen Huang has offered a different perspective. Speaking on Fox Business, Huang countered the idea, popularized by figures like Elon Musk, that a robot-filled future will free humans from labor, suggesting instead that AI will make us busier. Huang, whose company is at the forefront of AI chip development and has seen its valuation soar, believes that advancements in AI and robotics will actually create more opportunities and necessitate increased human engagement. He envisions a future where robots are ubiquitous, performing tasks across various industries, from robotic surgery in hospitals to advanced agriculture and manufacturing. Nvidia's Jetson Thor, described as a robot brain, is a key component of this vision, powering increasingly autonomous systems. When questioned about whether increased productivity from AI would lead to a 4-day workweek, Huang acknowledged the appeal but stated his belief that humans will have more to do. He explained that while AI makes many tasks faster, it also unlocks new possibilities and accelerates the pursuit of new ideas. Most companies have more ideas than we know what to pursue, he noted. Huang anticipates significant GDP growth and increased productivity driven by AI and automation, leading to enriched lives and better quality of life over time. He also acknowledged that while some jobs will disappear, many new ones will be created, and crucially, every existing job will be transformed by AI. This outlook contrasts sharply with predictions of mass unemployment and idleness, framing AI not as a replacement for human endeavor, but as a powerful augmentation tool that unlocks greater potential and complexity. Huang's perspective is grounded in historical industrial revolutions, which have always brought social change, but ultimately led to economic growth and improved living standards. His focus remains on the technological enablement of these changes, rather than the political or social restructuring that might be required for more utopian outcomes. The discussion also touched upon Nvidia's recent performance, with the company's stock experiencing a dip despite strong overall sales, largely due to data center revenue not meeting expectations, sparking debate about the sustainability of the AI bubble. This forward-looking vision from Nvidia's leader is crucial for understanding the AI revolution. But what's happening on the global stage with other AI players? Prepare for a look at how a rising tech star in China is navigating its own rapid growth and the complex international landscape it operates within. China's AI star issues caution amidst skyrocketing growth. Cambricon, often dubbed China's little Nvidia, has issued a stark warning to its investors, cautioning them about the significant risks associated with its recent astronomical stock gains. The company's stock has experienced a phenomenal surge, nearly doubling in the past month alone, driven by a broader market rally fueled by favorable Chinese government policies supporting domestic artificial intelligence chip development and the introduction of new AI models tailored for these chips, such as DeepSeek's latest offering. This rapid ascent, which has seen the company's stock price climb an astonishing 533% over the past year, has prompted Cambricon to remind investors that its current valuation may be outpacing its fundamental performance, creating a potential for substantial risk for those participating in the trading frenzy. The company explicitly stated in a filing to the Shanghai Stock Exchange that its stock price could deviate significantly from its current fundamentals. Adding another layer of complexity and risk, Cambricon highlighted its vulnerability to U.S. export restrictions. Specifically, the company and several of its subsidiaries have been placed on the U.S. Department of Commerce's Entity List. This designation poses significant risks to the stability of Cambricon's supply chain, potentially impacting its access to critical components and technologies, and consequently affecting its overall operating performance. This geopolitical factor is crucial, as it subjects the company to external pressures that are beyond its direct control and could hinder its growth trajectory, despite strong domestic demand and policy support. Investors are therefore faced with a dual challenge: assessing the company's intrinsic value amid speculative market behavior and factoring in the significant geopolitical and supply chain risks imposed by U.S. sanctions. The situation underscores the volatile nature of the rapidly expanding AI sector, particularly for companies operating in a landscape shaped by both technological innovation and international trade tensions. The warning serves as a critical reminder for investors to conduct thorough due diligence and maintain a balanced perspective on the long-term viability and risks associated with high-growth technology companies in the current global environment. This global perspective on AI development is essential. Now, let's bring it all together with a quick recap of today's biggest stories. Get ready for a rapid-fire rundown of the market-moving news you need to know, followed by your complete guide to staying connected with us. And that's a wrap on today's essential updates. We saw Nvidia leading a mixed market sell-off, futures markets reacting to major legal rulings, the Nvidia CEO predicting a busier AI-driven future, and China's little Nvidia warning investors about risks. Don't miss out on any of the critical insights that shape your world. Hit that like button if you found this valuable, subscribe to Qualcomm Pulse for your daily dose of essential news, and ring that notification bell so you're always the first to know. For more in-depth analysis and behind-the-scenes content, follow us on all our social media channels. We'll see you in the next broadcast.